during budget time, during our medium-term budget policy statements, the information that we have on performance information, and basically ticking the boxes of how much data do we have out there, including your People's Guide on the budget, which seeks to summarize the budget in a way that is reader-friendly and user-friendly, even for people who are not budget literate. So this for us necessitated a different approach to sharing budget data. We had to now explore other means of sharing this information that we are currently sharing. So because previously we had engaged civil society and we had other platforms of engaging with members of the public, we leveraged on those relationships, and we established a partnership with a group called Imali Yetu. Imali Yetu is a coalition which constitutes of some of the organizations I have here on the screen, PSAM SPY, Section 27, and many others. So basically, Imali Yetu was a spin-off from us realizing the need for an online portal. It was because we then said you needed to organize yourselves so that you have one voice that will represent many civil society organizations. And Vuleka Mali was then a result of that partnership. We launched Vuleka Mali in 2018 in February, just after the budget in Parliament. And it has been basically the intention and the aim and the objective of this portal is to provide information in an easily accessible way. But most importantly, also to inform the public, because we believe that an empowered citizen is a citizen that is able to hold us accountable as government. So for us to be able to drive the agenda of budget literacy, transparency, accessibility, openness, we needed something that was aligned to the fourth industrial revolution. We could not do things as we've always done them, and this is why Vuleka Mali was launched. The portal is as a hub of information. So amongst other things that we have on the portal, we have educational videos. This is now meant to bridge the gap in terms of the literacy levels of the public when it comes to the budget. We have a video telling people about what the budget process is all about, how it flows. The slide that Mr. Sishi went through to explain that we make recommendations and then it's presented to MinCombat and then to Cabinet. Those stages are then outlined so that people get to understand better what the budget process and how it works. And we have videos on what the portal is about. We also have a video on the procurement system in South Africa. We have videos about information that we felt people needed to get more data on. So these are educational videos. We have a facility for contributed data. This gives you access to researchers who might be interested in human settlements development grant, for example, and they have seen the growth over the years. They've done their analysis, they have done their own research, and then we also have structured data. So what you would usually find on the website through data that is currently available on the budget review, you will be able to find on Vuleka Mali. But we try to present the information differently instead of replicating what already exists on the National Treasury website. So we also have infrastructure data. We try to locate the information so that people can know the locations of such projects. This is helping us also as the public to also keep track and monitor service delivery. We have what we call a procurement guide, also outlining the processes that have to go with procurement. I will go into the portal now just to demonstrate what it looks like. So the portal on the chat bar of the 2 trillion budget that was tabled. So if you are not in financial mismanagement, this is a summary for you to be able to get a glimpse of how the funds are currently spread across. I will hand over to projects that we have, whether it's PPP projects. It'll tell you the stages they're in, the locations they're in, the budget. So you're able to keep up and basically, as I said, monitor with us. And then the last one I will look at is the one that looks at spatial data location. So this one, we don't have as much information as we'd like, but you are able to use this to, for example, see SASA points on the map. So you'll see by location how many SASA points do we have in this region, and if you want to see post office service points, for example, you can be able to identify that. So Vuleka Mali is an ongoing project. It's a process that is unfolding over time, and it is growing as we get user inputs, because we realize that as the National Treasury, we could not determine or even be able to predict what the public wants to see without engaging them. And hence we had to get civil society representation to be able to get an better understanding of what people want to see. I know I said that was the last one, but we also have a procurement portal where you are able to get links to our OCPO websites, and also we have what we share as the procurement guide. So it will tell you the stages of procurement, how you go about the planning, the procurement initiation, the selection, the rewarding, the contracts, and the implementation. So we try to do as much as possible the information sharing and empowerment processes that we possibly can as Vuleka Mali. And we are urging you as higher education and training to also make use of the portal. We have data in CSV, XLSB. So for those who want to analyze the data at a finer detail, so maybe you don't want to see it graphically illustrated, but you want to do your own analysis and make sense of the numbers for yourself, we have that kind of platform through the API, and then you can be able to gather as much information as you'd like as it is publicly available. I will stop right there. Thank you, Chair.
Thank you very much, Prudence, for that presentation. I think it is such an exciting portal, and we would encourage attendees as well as just spread the word of mouth for your colleagues to also take advantage of Vuleka Mali and be able to interact with it. I think it is such a gem when it comes to information, and hopefully colleagues that are attending here today can be able to interact with it. We do have another question, which I will read out now. From Mr. Harold Ngalawa. I think that is Professor Harold Ngalawa. So the chat box reads, my name is Harold Ngalawa from the Macroeconomics Research Unit at UKZN. My question goes to Mr. Sishi. In the spirit of fiscal and monetary policy coordination, I did not hear anything along this line. How does this budget support the South African Reserve Bank's efforts to keep interest rates and inflation at the current low levels? Prudence, I will just ask you to just close the video for now so that Mr. Sishi can then come on and respond to that and the question, as well as some of the colleagues, if he would like to rope them in. Thank you.
Yeah, thanks for the question. I noticed one of the difficulties we've had over the last year is, as I indicated, it's been a very unusual year. We obviously, with a dramatic cyclical decline, we saw inflation also go down quite substantially. We anticipate that inflation will more or less remain along the midpoint of the target range over the medium term. We believe that one of the reasons that will be the case is the fact that we have a fiscal stance that is predicated on reducing the debt overhangs and reducing the likelihood of fiscal dominance that could affect the financial system and the economy at large. And so we think that in that regard, there is a significant level of coordination as far as policy objectives are concerned. But more broadly, I think that we recognize the fact that there is an important lesson of history here. And that important lesson of history, recent history, is that if you take a decision to increase spending in response to what might turn out to be a temporary bump in revenue, you create a situation in which, on the one hand, you may contribute to, as we believe we have, you may contribute to a suboptimal monetary stance if that means, for example, that you are accumulating large amounts of debt in order to finance consumption, which has been the growing trend in South Africa over the last number of years, and which this budget seeks in part to reverse. It's also the case that you need to recognize the source of poor economic growth. And there is, of course, a strong debate about this in South Africa. There are some whose view is that poor economic performance has primarily been a feature of insufficient demand. And so policies that raise aggregate demand are preferable under this reasoning. On the other hand, there's also the view that a big part of South Africa's problem is structural in nature, and that in fact the country has had low levels of potential GDP as a result of structural problems, high barriers to entry, a labor market that's fundamentally not dynamic, and low levels of international competitiveness, including as it relates to an uncompetitive education system. So when you look at it from that perspective, you then recognize the fact that you need to unlock those structural constraints in order to raise the levels of growth at a sustainable level without potentially overheating the economy. But that would be my response in that regard. I don't know if, James, you have anything to add if you're on the platform. James is a director in our economic policy division, and maybe he might have a view.
Thank you, Mr. Sishi. I think you've covered it well, unless anyone has a follow-up question. Thank you.
Thank you so much, Edgar and James. We do have one more, or rather two more questions. I will just go to the one and allow colleagues time to interact with that question. This is Maxwell Muradia. I hope I pronounced that correctly. He's a postgraduate student at the University of KwaZulu-Natal. This is again for Mr. Sishi. I am informed that the salaries of doctors will be reduced by about 33%. Would these salary cuts be expanded to all public servants? I will hand over to colleagues to respond before we take the next question. Thank you.
Thanks. That's an easy one. I don't know who informed you of that, but you should stop listening to them because that is completely false. There is no planned reduction in the salaries of doctors. In fact, we are not proposing in this budget a reduction in the salary of anybody. what this budget proposes is that the cost of living, the increase in salaries in government be kept below inflation. So in nominal terms, we're proposing a salary increase of very little, around 1% year on year. No salary cuts are being proposed for anybody in this budget, and we don't envisage such a budget in the future. Thank you.
Thank you so much for that response. I see there's a hand from one of our colleagues, Nico Likete. You may come in, Nico.
Thanks, Chair. Just in addition to what the DDG has clarified, maybe Mr. Maxwell he might be confusing this card with the card that was announced by the president at the start of the COVID, when his cabinet was going to be taking 33% pay cuts that was going to be increasing the COVID funding. He might have confused that cut to this cut that was announced by the president at the beginning of the COVID pandemic. Thank you, Chair.
Thank you so much for that clarification, Nico. We'll be moving on to the next question, which reads, it is from Sboniso Mukwena, and it reads, with regards to the 200 billion that was allocated to support small businesses that were experiencing financial distress as a result of the COVID-19 pandemic, based on present trends, only 18.9 billion in loans is approved under the scheme. Therefore, what made the National Treasury to select banks as the mediator to provide such funds, knowing that SMEs have a history of difficulties with getting loans from, I assume that meant from banks? Thank you. I'll hand over to colleagues for a response.
Thanks. So the credit guarantee scheme, or the loan guarantee scheme, which was first announced on the 30th of April in a document that we published on government's proposed fiscal response to the pandemic, and then of course was formalized in the special adjustments budget that was tabled on the 24th of June, is a guarantee scheme. It's not an allocation; it's a guarantee scheme. It's not a grant, it's a guarantee by the state on privately issued loans to businesses, small or large. This was very much according to international standards. These credit guarantee schemes were quite common during the early days of the pandemic as part of preventing business failures as a result of the need for businesses to finance their capital expenditure or to avoid unfunded calls on loans. And so it was the government basically standing as a guarantor against loans in the private sector to prevent business failures. But in addition to that, it was also an attempt to incentivize private sector banks to provide loans, additional loans, capital investments, without fear that those loans would become basically bad debts that would have to be written off later, thus creating a knock-on effect, a negative knock-on effect in the balance sheets of banks and potentially leading to a financial crisis. One of the lessons we learned from the global financial crisis of 2008 is that toxic assets can lead to the destruction of banks, and the destruction of banks is a bad thing for an economy. And it takes many, many years to recover from that. And so you don't want to be in a situation where you have a financial crisis of that magnitude. And so the government stood as a guarantor. We have been aware over the last year, almost now, it's been almost a year since the credit guarantee scheme was first announced, that a lot of misconceptions have popped up around what the loan guarantee scheme is. Some people have incorrectly assumed that it was a grant. It wasn't, never was. Some people incorrectly assumed that it was money that was set aside and then banks were promised that money. That's also not the case. It was a guarantee scheme. In other words, it was an increase in the contingent liabilities of the state in order to ensure that the credit market continued to operate in an environment in which, given the severe lockdowns that were implemented, could have led to a different direction. It's also important to remember the fact that banks provided their own support to lenders that they created as well, in addition to the 200 billion credit guarantee scheme. But that being said, banks were still under the rules and regulations, including capital adequacy rules, to ensure that their own capital provisions were sufficient to prevent a bank failure. And so the balancing act between those two things was important, and those capital adequacy ratios were still in effect, meaning that banks were still in a position to, were still required to ensure that they did not build up a lot of bad loans in their books. Thanks.
Thank you so much for that. Edgar, please bear with me, colleagues. I see a hand from Bomi Cyril Nomlala. You may come in if you have a question to pose to our panelists. Thank you. I'm sorry, Bomi, please bear with us. Our IT colleagues will just unmute you. Thank you.
Thank you, Program Director, and thanks for this particular session. My name is Bomi Nomlala from UKZN. My question goes to both, I think, Prudence Cele and Mr. Sishi. We've seen both government departments and municipalities returning allocated funds back to Treasury. What are the monitoring mechanisms that are there to ensure that budget is utilized when there's still a lot that needs to be done in South Africa? Thank you.
Thank you so much, Bomi. I will hand back to colleagues to give a response to that. You may turn off your video. Thank you so much.
Yeah, thanks for the question. This, of course, is it's a question about something that has been perennial in government for many years. I do think that, and I'm glad you also raised Prudence's presentation. I do think that the Vulega Mali project, which Prudence presented on, will help in this regard, because it will provide the public with an opportunity to see exactly what's happening in each of these sectors. Ultimately, the people responsible for spending the money and spending it correctly are the sector departments. If it was solely the Treasury's responsibility to make sure money was spent, then there's no need to have a Department of Education or Health or whatever. Those departments are there. They're there for a purpose, and that purpose is to execute their mandate as as outlined in terms of not just the law and the Constitution, but also the policy of government. And that's the responsibility of those departments, the heads of those departments and the ministers who are equal in cabinet, frankly, to the Minister of Finance in making sure that they spend that money appropriately and they spend it in terms of the law and that they avoid waste and that they combat corruption or any kind of inefficiency within their departments. There are various projects that are implemented at the national, provincial, and local government level to improve the financial outcomes of institutions of the state, including such as Vulega Mali. But ultimately, we have to be very, very clear that accountability must be placed at the level of responsibility, and that is the case as it relates to spending. Thanks.
Thank you so much, Edgar. Prudence?
Thank you so much. I think Edgar responded quite well to that. And I think I just wanted to give an example of how a platform like Vulega Mali can assist in us also holding government to account. There was an issue in Limpopo with some toilet saga. And then one of the civil society organizations who was using Vulega Mali came across a grant framework which stipulated some of the conditions for funds to flow. And then now their argument with the province was no longer about them delaying to deliver because the Treasury did not send the money, but the argument was then, which of the requirements have you not met? So I think this is how we empower society, because the information is now available to all. I would have told the people because I know that there are certain conditions, but not everyone knows this. And this is where we're trying to get the level of information to be equal. And with that said, I just wanted to emphasize the issue about the Treasury in itself. It's also a national department that must be held accountable. Hence, the budget for the National Treasury is also on the website. So there is, as much as we can be responsible for financial management, we are also accountable for our part in it, but we cannot in any way take responsibility for another department. Hence, the accountability must be always in the level of the responsibility. Thank you so much.
Thank you, Prudence, for that response. I don't see any other hands or any more questions. And seeing that we still have some time, I would maybe give Edgar and colleagues just a few rounding up remarks before we maybe hand over to Professor MacArthur for some closing remarks as well. And then we can actually bring the session to a close. But please do note that questions are still welcome. You can still raise your hand or you can still type. And also to the colleague who asked about the loan guarantee scheme, please interact with the chat box as well. There were more responses to your questions, just so that it assists. Thank you, Edgar and colleagues. Just a few rounding up remarks, and then we can hand over to the professor for his remarks as well.
Now, thanks, Nsakisi, and there's not really much for me to say, except just to reiterate, I guess, some basic points that we've made. As I said at the very beginning, the fundamental consideration when you think about the budget, any budget, is that our resources are limited and scarce, and therefore choices must be made. If resources were limitless, then you wouldn't need a budget. The budget is testament to the fact that your resources are limited. The very fact that you have a budget says that you don't have enough money. If you had enough money, there would be no need for a budget. You would just spend whatever you needed to spend whenever you needed to spend it. So that's a key consideration. It's a very elementary thought, but often the way people react to a budget suggests to me that this elementary consideration has been forgotten. And so trade-offs are important. Choices need to be made. The last year has been particularly difficult. A once in a generation, perhaps a once in two generations pandemic affected us in ways that none of us could have anticipated and battered an already weak economy. It is not enough for us to return to where we were prior to the pandemic. We need to raise our potential, and we need to go to a higher trajectory in order to increase welfare, improve livelihoods in our economy, and restore the stability of public finances. But in the meantime, we need to do two things. We need to the extent that we can, provide targeted support to economic recovery, particularly in respect of COVID itself, by providing for a mass vaccination campaign, as well as ensuring that the health sector has what it needs within reason to ensure that we can respond to any other waves of the pandemic. But at the same time, we need to be realistic about our fiscal position. We need to restore the sustainability of public finances. We need to consolidate the public finances and stabilize debt. If we don't do that, then the interest on that debt and the size of the debt itself will overwhelm the public purse and continue to frustrate our ability to target government's key policy priorities. We believe that this budget does strike the appropriate balance. It does ensure that in the short term, we're able to do what we need to do, but over the medium term, we're able to take the difficult measures necessary for us to ensure that we have a stable macro-fiscal environment over the long term. Thank you very much to everyone. Thanks, Tsakisi, for this opportunity, and thanks to everyone at UKZN.
Thank you so much, Edgar. Professor MacArthur, if you have any comments as well before we bring the session to a close. Thank you.
Thank you, Madam Chair. Mr. Sishi's summary was quite excellent, although quite sobering. So I have nothing useful to add in terms of that. As an IT academic, even I could understand the dynamics in terms of the budget composition and process. So thank you for that clarity. I must commend the National Treasury on, once again, their transparency, their openness in terms of the process. I think it really is moving leaps and bounds with the new project as well. To the panel members, thank you for your presentations and input. And of course, to all the participants, thank you for attending. Keep well, everyone. Stay safe. And from the UKZN, keep well. Thank you.
Thank you so much, Prof. And just from our side, it's also just to thank the university for participating and for extending the invite to their own broader community. Also to thank the National Treasury colleagues that managed to set aside time from their busy schedules to be able to form part of this. And also to just thank the organizers of this session. There's a lot of work that goes on behind the scenes, and thank you for everyone for being hands-on on that. And also just thank you to the participants. This wouldn't have been a success without your attendance, and hopefully you do take something away from this session today. Thank you, and stay safe.
Thank you, everyone.
this budget seeks in part to